Hey soldiers, the Fed is now coming out and telling us what we already knew. Why are they doing this now? Well, because they know that the situation in this country as far as the economy is only going to get worse before it gets better. And the economy is cyclical. I want you guys to understand that. I'm not a doom and gloomer. The economy is going to go through troughs and peaks, all right? And right now, we are headed into a trough. We've been over the numbers on this channel at great length. But now we've got the Fed coming out and pretty much throwing cold water on this whole whiteboard presentation that Biden did the other day, where he's showing you how Bidenomics is working. And again, I never tire of saying, yeah, it's working if by working you mean making people poor. Then it is working quite swimmingly, Joe Biden. Real quick housekeeping note, guys. Look, I don't know whether this channel has legs or not into the future, but I've decided I'm going to talk about what I want to talk about. I got this consultant and the individual said, you should stay away from politics. Well, no, I'm not going to do that. I am going to focus on the economy, but you cannot separate the economy from politics. And guess what? I'm not a journalist. I'm not a reporter. I am partial. I do have an ideology that colors my way of thinking. And so you're going to hear more of that on this channel. And again, obviously this is a very, very small channel. I do not have any illusions of ever becoming like 1 million subscribers or anything like that. But what I will tell you is I'm going to be totally honest in terms of the way I see things. I have been and I will continue to be. And we're going into an election season, and quite frankly, for my money, this guy that's in this got to go. He's got to go, okay? Because Bidenomics, again, is destroying wealth. And what really bugs me is that he gets up there, and Joe Biden is so out of touch. And the reason he's out of touch is because the man literally has been in government for about as long as I've been alive, okay? Karine Jean-Pierre, the young lady who's the White House press secretary, I believe she's in her late 40s. Joe Biden's been in elected office longer than she's been alive, all right? So the man is basically a superstar welfare recipient. He's on the government dole and has been. He's been able to parlay that into quite a decent fortune. Story for another day. But look, you're living in government housing, Joe Biden. You're eating government grub, okay? So you're not shopping. When we get these economists, when we get these government officials and executives coming out and talking about the economy, they're never doing it from where we are. They're always looking down from Mount Olympus. I shop for my own groceries, okay? I know what's going on out there. So that's what we're coming at this with. And we know that now, the Fed's telling us this, so I guess we can believe it. We only had our lying eyes to tell us that prices were up before. But now the Fed says a key inflation gauge shows no relief for squeezed families. An inflation measure closely watched by the Federal Reserve ticked higher in July as steep prices continue to squeeze millions of U.S. households. The Personal Consumption Expenditure Index, they got 1 million of them, right? Show them what they want to see. But this one, the Personal Consumption Expenditure Index, showed that consumer prices rose 0.2% from the previous month, according to the Commerce Department. On an annual basis, prices climbed 3.3%. So they're out there. Again, we did the video, guys, where we told you. This was like last week or maybe a little bit longer than that, where we clearly said, look, all of these news reports about, oh, inflation's under control, inflation's going down, inflation hasn't risen as aggressively. We called BS on that, and we examined exactly what you go out here and spend money on, and we showed you, yeah, inflation is still going up. And the numbers that they're giving you are lowball numbers. It's 3.3%. I don't believe in that. It's probably more in the range of a 7% increase year over year. And I say that because if you look at John Williams' shadow stats, that CPI number, consumer price index, always, that 80s era calculation always runs a few percentage points hotter than the watered down metric that they give us today. The one that they can trot out on the news so the teleprompter reader, the bleach blonde, can read it with enthusiasm and make whatever administration is in power look good. The figures were both in line with estimates from Refinitiv economists. I guess that's how you pronounce the name. Core prices, which strip out the more volatile measurements of food and energy, climbed 0.2% from the previous month to 4.2% from the previous year. Now check this out. Notice how they strip out that food and energy piece. Those are two of the three items that you will spend the most money on in your entire life. Food, energy, and housing. Okay? But they're saying, oh, it's too volatile. We're going to take those out. It's too volatile. That's total BS. Yeah, it's volatile, but we're exposed to it on a daily basis. Every day you are eating, you're feeding your kids. Every day you are manipulating a thermostat in your home, putting gasoline in your car. Okay, you are exposed daily, throughout the day, several times a day, to the volatility of energy and food. So to not include those in an inflation metric shows you what type of sleight of hand and subterfuge that these people are up to. Okay, it's not reflective of what we are actually experiencing. While the Fed is targeting a headline inflation number of 2%, Jerome Powell previously told reporters that core data is actually a better indicator of inflation. So he's going to go with whatever number, looks best, just like they do with the jobs numbers. They don't go with the U6, they go with the U3, although the U6 metric is a more all-encompassing measure of the employment situation in the country. Both the core and headline numbers point to inflation that is still running above the Fed's 2% target. And that's such a lie. I talked to a friend of mine who's actually going to be on the channel soon here at some point. We had a little disagreement on this thing where, the Fed's target is 2%. If you take that number as gospel, you're going to run into some trouble. And here's why. If you say, okay, all I got to do, the Fed's going to get this back down to 2%. All I got to do is beat 2% and I'm beating inflation. No. You're going to be underwater, and over the long term, you're going to find yourself underwater with a life jacket that won't inflate. So you're going to drown. Because inflation, that 2% target, I don't know how they expect to get back to that and sustain it. I don't even know if we were at that before the 2020 period, legitimately. Do not use 2% as your internal inflation metric when you are thinking about that number that you've got to beat in terms of your next raise or your return on investment. Because if you do, you will be sorely mistaken, broke, busted, and disgusted at some point. All right, so other figures included in this most recent report show that consumer spending jumped 0.8% in July compared with a 0.6% increase in June. Of course it jumped. You just told me that the month over month and year over year inflation was up. You just told me that in your report. Now, if I'm just going to buy the same amount of stuff, I'm not increasing my lifestyle in any way, shape, or form. If I'm buying just the same amount of stuff, then of course I'm going to have to spend more. You just told me inflation was up annually and month over month. So they use that to try to trick you into believing that, oh, the consumer's strong. The consumer is flailing. The consumer is exhausted. We got to come to the table with more dollars for the same amount of stuff. And in many cases, less amount of stuff. You buy a bag of dog biscuits or potato chips and it is, Burger King is being sued because of the size of the Whopper. People are saying, no, this isn't as advertised. This thing's smaller. McDonald's should be next because the Big Mac is, there's no way that I should be able to hold that Big Mac in, one hand and just eat it like that, okay, without it falling all over the place, right? So we're realizing shrinkflation as well, where you pay the same or more for less. We're seeing a lot of that as well. Consumers, listen how they try to couch this. Consumers spent freely in July, even if it meant dipping into their savings amid slower income growth. That's bad news, because now we're seeing that because income isn't keeping up, because we've got over $1 trillion of credit card debt collectively in this country, now we're seeing Americans do what Janet Yellen and the Fed and all the folks over at Treasury want us to do, which is take that stimulus money that they handed out and give it right back, all right, in the form of depleting our savings. They don't want us to have a high degree of saving. They want us to be on the edge. They want us out there working. They want us out there, one step away from unemployment and 2.5 paychecks away from total homelessness and insolvency. So we have to push back against these types of things. We know now that the Fed is confirming that indeed, okay, it's hard out there. People are indeed struggling and inflation is up and it's not done yet. So what do? Listen, guys, I'm a big advocate for this. You've got to get with your family and your friends, and you have got to sit down and you've got to plan out. Break out Microsoft Excel or whatever spreadsheet you use. You got to plan out, what do we eat? Start planning your meals. I do this in the winter anyway, because I'm in a food desert. I can't walk to the grocery store. So what I do is I plan out family meals. I even got a chart on the side of the refrigerator in terms of what we're going to eat day to day. That way, we're not tempted to go out and spend money, fast food. We're getting wholesome, healthy meals. And by planning it, we're ultimately spending less because we can sort coupons. We can buy in bulk. All right. And I know this stuff doesn't sound sexy. A lot of channels talk about the economy and personal finance. They're high flying, and this is the next stock. This is the latest cryptocurrency. But look, I'm just trying to show you how to recapture some money, keep your head above water so you can buy assets. All right. Not sexy, but practical. So, guys, look, I want you to take a look at this video, the job market. Here's some truth about the job market. This is why you need multiple streams of income, because that job market is not stable. What they've been saying, we uncover the truth here. Check it out. Guys, I'll talk to you soon.